Let's start with China then, Mark. And we have a continuation of last week's concerns surrounding the property sector. We also have new news lines surrounding wealth management. What is it that's caught your eye? A downgrade from Morgan Stanley as well for Country Garden. So what's caught your eye in terms of guiding sentiment right now?
It's really, really bleak news flow. And when you were off, Anna, last week, I was highlighting one of the interesting dynamics recently is that the news flow has just been terrible around China. But in fact, Chinese stocks, most Chinese assets have been outperforming the rest of the world over the past month and have been in positive territory. Now, with the declines this morning, in fact, the CSI 300 is actually just about probably going to be ticking to negative territory for the past month. It is still outperforming US stocks and generally around the rest of the world, but that might change soon. I'm interested to see that dynamic. Given that we just continue to throw everything at this China story, if Chinese assets can continue to outperform this week, then I think that will really confirm the idea that these are assets which cannot fall much unless everything is falling, of course. And therefore, that means they are ripe for a serious rally if we ever get a positive catalyst. I should emphasize, I do not see any positive catalyst on the horizon.
OK, and that's interesting in the context of the PBOC this week. More about that a little later on in the programme. Let's talk about the high yield story then and where we are on that particular part of the narrative, because Monday is showing some of the same themes as Friday around higher yields and the strength in the dollar clear to see as well. Where does that take us, Mark?
Look, I'm someone who overall doesn't think we've seen peak yields even at the front end in this cycle. I think that we're in a period of playing the disinflationary theme. We kind of talked that this would be the theme of this summer because of base effects. We knew that would be the case. But the same maths means we know that base effects means inflation will tick up in the fourth quarter. So I think that maybe into September you want to play the disinflationary theme. But ultimately, I think we're going to see yields go higher towards the end of the year. Where are we right now in that narrative? Probably a little bit of no man's land. It's too early to play that next aggressive bearish wave in bonds, but knowing it's likely to come in the fourth quarter, I'm not particularly excited about being bullish bonds either. So I think we're in that kind of summer volatile directionist mode for bonds.
Well, something that was full of direction last week, of course, was energy prices here in Europe. And we're getting a reminder of that with energy prices just ticking up slightly this morning on European natural gas prices and UK natural gas prices. A reminder, perhaps, of some of those base effects that might kick in later in the year once again. Mark, let's talk about yen intervention and the prospect of that. I read different things this morning on that subject. Some saying going through 145 matters. Others say, actually, the number doesn't matter. It's the level of volatility we see. What's your latest expectation?
I think it is the level, but it's not just against the dollar. It is across currencies. And we showed a chart on Friday saying the yen is at on a trade-weighted basis. It's at the lowest level this century. And we don't have longer dated at the trade-weighted index. So the yen is weaker across the board. It's not just on dollar-yen going higher. So that's one dynamic. But it is about speed as well. I do think that yen speculation is going to be a big topic of this week. Do I actually think they're going to come in yet? Not when US yields are continuing to rise. I think they're going to wait till they have the tailwind of the natural narrative behind dollar yen coming lower, and that means lower yields. So not yet.